Waste Management is one of those stocks that you hear a lot of people saying it's a buy and forever kind of company, and I completely agree. The company is up 73% in the last 5 years. It has a growing dividend, good share buybacks, and overall great management. But if you watch my last portfolio update, you know that I recently sold out of my Waste Management position. Now, Waste Management was one of the first ever companies that I ever bought in my portfolio, and I'm still saying it's an amazing business, so why did I sell it? I'm going to be discussing why I sold it today, going over some of Waste Management's key financials, and giving my insight on it as an 18-year-old investor right now, and also sharing where I put the money into. Let's get into the video though.
Hello, I like money.
So as I mentioned, Waste Management is one of the first ever 3 stocks that I ever invested in when I started my dividend portfolio right when the pandemic hit and around the lows of 2020. So I bought Waste Management, Starbucks of course, and Berkshire Hathaway Class B. And I only hold one of those companies still, and it's of course Starbucks. Now, you guys are probably calling me crazy for selling out of such an amazing business like Waste Management and Berkshire Hathaway, but let me cook here. So I first got in at Waste Management around $98.31. Since then, the stock has appreciated like a mother effer, and I got an 86% gain on those initial shares that I bought. Now, I did a little dabbling in 2023 back in a Waste Management around $158 and still got some good gains. So with Waste Management, obviously they're a garbage collecting company, and I think for a garbage collecting company, there's a giant security behind it. Obviously, you've heard the phrase, everybody's going to always need trash. So that automatically makes Waste Management a buy in a lot of people's eyes. And I think that logic is completely flawed. Just because a company is going to be around for a long time does not make it a good investment, especially for somebody as young as I am. The position that I had in Waste Management was also very small compared to my portfolio. It was only around like 1.5 to 2% of the portfolio, and I was not going to be buying at a valuation like this with a 32.79 PE ratio. That's absolutely ridiculous for a waste management company. The plain reason why I sold Waste Management, I got a really good price for it. Now, starting off with Waste Management's valuation, you need to take account how is Waste Management going to grow in the future. Yes, their past performance has been absolutely insane, especially for a trash company, but past performance is not indicative of future results. You need to reasonably ask yourself here, is Waste Management a company that collects trash? How much growth are they going to reasonably have ahead of them? What are they going to do to grow their business? I don't see a lot of things in their future that can have them have drastic growth compared to other opportunities in the stock market right now, some higher growth opportunities. So you're looking at their valuation right now. They're currently trading at a 33 price to earnings ratio. And we'll take a look at their growth after this, but I don't think it's reasonable to pay a kind of price like that, and that's why I haven't been adding recently. A company can be the best company in the entire world, but you could still lose money if I'm overpaying on it. And I think that's what a lot of people could be doing right now with Waste Management if you're buying at 210. Yes, you're going to still get a good return, I think, if you're even buying at these prices long term. But comparing that to a potential return with the S&P 500, I think you could be doing a lot better. But another thing when it comes to their valuation is the price to free cash flow, which has absolutely exploded, as one could say. Now, this is mainly due to some capex that they're also doing, some increased capex, some acquisitions that they've been going through with, hopefully for future growth if you still own the company. But I just can't reasonably see a world where Waste Management deserves to be trading at a 33 price to earnings. Yes, they should have a premium on them for sure. It's not going to go anywhere. The business is very, very secure, but the growth is just not there to back up that kind of valuation. Now, before we take a look at the free cash flow Waste Management, I want to look at the revenue because obviously they've been kind of upping capex. I think revenue right now could be a quality indicator of good growth for Waste Management, but you look at it, and for a company that's trading at its kind of valuation, I don't think the growth backs it up. You have a 5-year growth rate of 7.74%, very good, a 10-year growth rate of 5.37%, and a 1-year growth rate of around 5%. It's good growth, but not 32 PE growth. And the free cash flow growth isn't anything to write home about either, and it's actually lackluster, which is why I showed you guys the revenue growth, because I think that's a more accurate picture to paint. But you look at the 1-year growth rate, it's down 5%. Obviously, CapEx is included in this, so I really wouldn't pay too much attention to it. But you'd see it's been really stagnant since around like 2015. A 10-year growth rate is 5.93%, which is the number I would be looking at. I think that's kind of the number I would be expecting if I were investing in Waste Management at this point when it comes to free cash flow growth. But I'm just extremely curious to see where they're going to get this future growth from, because their growth has not been that impressive in the last 10 years. If you're paying a 33 price to earnings ratio for this company, just where's that growth going to be coming from? I'm extremely curious. I think Waste Management offers sustainable quality growth like that 4 to 5%, but I think you can be doing a lot better. I think another thing with Waste Management that's extremely particular to my situation it was a small holding. It was a small holding relative to the portfolio still. I thought I could use the capital to put it in some better ideas. So I sold around $450 worth of my Waste Management at a 50% gain. Now, that 86% number came from the initial 2 shares that I bought at around $110, and I dabbled in at 140, 150. I thought that was a reasonable price to pay for it. So I got around $450 at a 50% gain, which I was very happy with. Obviously, I wasn't going to be adding to the company anytime soon at the current valuations. Now, I will definitely add back to Waste Management if it hits a fair price. It has to be at a reasonable price where I think I can get a market respectable return. There's obviously some security in Waste Management, which is appealing for maybe investors that are in their 40s or 50s, but for me, I think I could put in a lot better ideas with a little more risk, but still a lot of upside, and I'm still going to get a really quality return with the investments I put it in. So you may be wondering, Ryan, what are the better ideas? To start off, I put the money into Visa and I bought 1 share at $261. I actually got a better valuation for a company like Visa with a lot more growth ahead of it than Waste Management. Absolutely crazy to think. And I also bought 1 share of SHG, which I had already added to in the days, which is why it says 2. But just a lot more security in this investment as well over the long term with a lot more growth upside than Waste Management. And I absolutely think I upgraded the quality of my portfolio without overpaying. To put it simple, I got a really good price for Waste Management, I sold out, and I put the money into some even better ideas that are going to be core positions for my future. Alright, hope you guys appreciate the transparency in this video. If you appreciate it, smash the like button, subscribe if you haven't already. Also, thank you to my channel members Redwood, Ritz, and Jacob. I greatly appreciate all your support. Thank you for watching. Smash the like and subscribe. Do dividend stocks, not drugs, and have a good one.